Hello, everyone. Happy Friday, the 26th. We're going live. I was going to set this up for a recording, but I figured, you know what? Might as well record it. And I don't really care how it goes because if something goes wrong, we'll put it straight. Happy Friday. This is Brian TINYCRYPTOBLOG. Welcome to the weekly summary. A few changes this week. Hopefully, they work out good, and we'll see how they are going forward. So, what happened this week? Price action. We continued to have a lot of pressure this week. It was reported, and actually, you know what? I'm just gonna get cozy. Why not? Salud. This week there was a lot of action with pricing in the downward direction, and this was attributable to Bitcoin ETFs, specifically a two-layered prong type of thing, where on the one side you had FTX selling their excuse me, tickled there. You had FTX selling their GBTC. Now that with legal proceedings, they can begin to unwind positions and cash those out in order to make debtors whole and fill their IOUs. So that created selling pressure. And also, and this one, I'm going to say not so much. They were saying that GBTC, the grayscale redemptions, was causing downward pressure. But the only thing with that is that it's essentially a wash trade. So the way that GBTC works, because it's going from a trust to an ETF. Now, right now, let's say an ETF, BlackRock, Fidelity, if they want to buy, if they're getting investment and money put into their Bitcoin ETF, they need to go to the open market either through exchanges, through over the counter, through private agreements, however, to acquire the Bitcoin to match the valuation of their ETF. Grayscale has an extra step, and I'm thinking this might have been a deliberate thing, where they have to sell the Bitcoin that was in the account of their trust, sell it in the open market, buy it back, and be able to put it into their ETF. But also, too, Grayscale, the GBTC, is the last hanging on remnant of the 21-22 bear cycle, where it wasn't until now that people can make their redemption. So people that have been stuck in that are able to sell. So there's actually been a lot of sell pressure too. But in spite of that, going on to the next point of noteworthy news, Bitcoin ETF inflows have a hot week where they have added, looking at my notes here, in the first 7 days of trading, Bitcoin ETFs have pulled 100,000 Bitcoin out of circulation. And that's a good chunk there. That's all locked up in custodial accounts, whether it's Coinbase, whether it is BitGo. I think Fidelity they might be doing Coinbase and their own because they already have their own services. And I'm not sure if ARK is using any of their own self-custodial services or not. But it was noted that, and it's not a quite accurate like-for-like comparison, that MicroStrategy took 2 years to accumulate the roughly 300,000 Bitcoin that they currently have claim of ownership on. And we've had this from the 10 ETFs, because one of them shut down. That might have been a futures ETF. The 11 ETFs in the first 7 days. And then, I've got a note here. The rumor mill, looking at the headlines and seeing opinion pieces, that an Ethereum ETF, now that Bitcoin's paved the way, might be easier to pass and have go live. The first date that's been noted is May 20th of this year. And that's based on the application dates. I think, I forget who I read it was that got rejected yesterday, but I think this will be something that's going to get hashed out not until May. And then, if anything, there's always the chance that what will happen is just like the Bitcoin ETFs, they'll all get rolled over and then approved at once. So that way there's no show of favoritism. So that's a possibility as well. So we probably won't see, if there's an Ethereum ETF or ETFs going live, we're probably not going to see it until mid-year, third quarter. And then I'm going to move on. Another topic category, risk vectors. A couple things. If you were on CryptoCoin Mindset, Keith's Crypto on the Rocks hangout last Friday, I had a chance to jump on, and he and I were talking. And one of the things we touched on was stablecoins and how, with the level of regulation and the level of compliance and involvement with regulatory and lawmaking bodies that the people running the companies behind some of these stablecoins are involved with, we're seeing it could lead to risks for usage. For example, Tether is getting touted as being fantastic because they have great compliance and $90 billion in assets, and they have all these operations, and they're used worldwide, essentially first mover advantage. But they've, as often noted, they've onboarded the U.S. Secret Service, and I think it was the FBI. And they've also, in the last 6 months, 12 months, there have been numerous pieces written up in the coin telegraphs and the coin desks about how addresses were frozen. And these were at the request of law enforcement bodies, but still, if you've got coins in a wallet right there, that can get locked up. If you have used Tether and tied it to an Ethereum address of yours, it's now trackable and traceable, and you have fingerprints out there. And that can be used against you in any way, shape, or form. And Circle, last week there was an article, Circle wants to issue an IPO. Circle has openly said, if there is a CBDC, we want Circle to be a part of that. Because for them, it's just income. There's a way to generate the income and to get the attention and then expand from there. Well, that in itself presents a risk because you don't know where it could lead. It's the same thing. There's the trackability. There's the lack of privacy, having your wallets frozen. And you don't know coins, where they've come from, where they've gone to, and how is it a case of, well, these coins went to your wallet. You might be guilty because these coins were in that wallet, and that wallet's been blacklisted. And next thing you know, you're screwed. Also, too, things that you might want privacy on, like DeFi protocols, or using something like that, well, they're not private anymore. And also, too, you have to figure, if we're looking at Coinbase as the first example, with Circle, what will it be like if they have an IPO? Because all of a sudden their ownership shares are going distributed with the general public. You're going to have the BlackRocks, you're going to have the banks, any banks, you're going to have the investment funds, the mutual funds, the hedge funds buying shares in this, in which case, whose interests are they acting on behalf of? Is it on behalf of the space, or is it on behalf of the financial system that they have now embedded themselves into? We're going to tie this in because I got a little, when we get to the commentary, I got some commentary about Swan Bitcoin that's making me think twice about them. And then I wanted to throw in this little nugget. XRP. So with all the clamor for ETFs, people only been clamoring, what about an XRP ETF? I'm not saying they couldn't do it, but I'm saying as a retail person, why in God's flippin' name would you want to touch that anyway? Why would you want to own XRP tokens as a long-term investment? It is the most centralized of the blockchain-based protocols anywhere. You have one entity that controls the code, the validation, the issuance, the circulating supply. And their incentive is these are tokens for a live business. They're meant to generate, they're a part of their revenue model. Who cares what retail investors want? They're going to do what's in the best interest of their business. So you're putting all of your trust and the future of your wealth investment in a third party's hands. If you want to take that risk, that's your call. But if we've learned anything over the last 10 years, you don't hold it, you don't own it, understand third party risk. And there is a crap ton of it with this. So if there were some way to have a Ripple ETF, my advice, and granted, oh, good, I already said it in our banner here. My financial advice is avoid the hell out of it. Don't even bother. There's better investments out there. And I forgot to throw in for price action, it's been downward. So Bitcoin's in the lower 40s. Other protocols have been down there. If you've got a long-term view, keep doing your DCA, do your dollar cost average, whether it's daily, weekly, hourly, monthly, whatever it is. Just keep buying in. These are good price levels, because if the potential of where they're allowed to go goes there, you'll do fine. You'll do fine. And you'll be glad you got in when you did with whatever you got in. Well, let me check over my notes here. XRP, the stablecoins. Oh, okay. I guess I get to go really into juicy mode now. So, open mic time. Commentary, aka commentary. Let's get this as a scroll so we can get that and get that. And hopefully get that and save it. There we go. In my apologies, I don't have shortcut keys and getting technical with all this stuff. I normally make edited videos or just do on the cuff for short. So thanks for bearing with me. Anyway, Swan Bitcoin. It was announced recently. Let's see if we can pop this open here. It was recently announced in a press release that they have a mining company that they've been operating since last year. And it was noted, and actually, I'm going to play this blurb from Tales from Rabbit Hole Recap, which hopefully the audio works on this. I think it will explain quite a bit. Let's let her rip.
Apparently, according to this PR Newswire, Swan started building a mining operation in stealth last summer 2023. Swan Mining already supplies 4.5 exahash to the Bitcoin network, meaning that around one of every 100 Bitcoin. Bitcoins, they use Bitcoins, mined globally is mined by Swan. The unit has purchased and taken delivery of mining equipment that will bring its total capacity to more than 8 exahash, expecting full deployment by March. Swan has mined more than 750 Bitcoins to date. Swan Mining developed and deployed at warp speed, said Rafa Zaguri, CIO at Swan and head of Swan Mining. Our understanding is that this is the fastest ever initial deployment of hash rate at this scale in Bitcoin history. Big moves. A lot of exahash.
Yeah, so 4.5 exahash is slightly under 1% of current hash rate. And just to put it in context, like everyone was shitting on Ocean during their launch. It's like 8x Ocean's hash rate. So it's a significant amount of hash rate. This puts the press release that we've discussed in the past, where they said 200 million in annualized revenue. It seems like the overwhelming majority of revenue is mined Bitcoin. If you do the math on 750 Bitcoin, you can get to that $200 million annualized revenue number from that. It's an interesting strategy. It should be interesting to see how it plays out for them, Cotton. But mining is difficult, so we'll see. I hope for the best for them. It's easy to chase revenue. It's harder to actually have sustainable margins in mining. They have not disclosed their capital partners. I do not have any insider information on that. But I'm pretty sure it's Tether and Bitfinex. This is pure speculation. It's a little bit odd that it hasn't been mentioned. But they told me I could speculate on it when I asked them if it was or not. So here I am speculating on that. So just something for people to keep in mind. Logan, can you pull up the Paolo tweet? I think this is one of the operations that Paolo is saying is he's at one of Tether's mines. Putting up a sign that says Satoshi Boulevard is, I don't know, just feels like a fun Swan joke to do at one of their mining sites. So just something for people to keep in mind. Swan is primarily a mining business now. It seems like that's the overwhelming majority of their revenue. And it's just a little bit odd that after the Swangate RHR episode, they attacked conflict of interest with Strike, when Strike has no intention of entering a mining business at all. So just want to put that one out there.
Yeah, just having been in the mining industry for 6 years now. I mean,
So why does this matter? What does it mean to you? Why am I talking about it? So if you haven't picked up, I'm mainly a Bitcoiner, where for me, the values of the community kind of align the most with me, where it's looking at things like third-party risk, ownership. If you don't hold it, you don't own it. And how with the decentralized nature of the protocol, it is probably the lowest in risk, especially what we saw with this previous cycle of third-party risk with all the Celsiuses, the BlockFis, the FTXs. There's third-party risk, and we learned about that good and hard, the Terra Lunas. So it's important to understand what the risk vectors are, and having the most decentralized network also means you have the fewest points of vulnerability and influence from outside actors. It's harder to change the protocol and get acceptance for changes to the Bitcoin protocol than it is for, say, a more centralized project like a lot of the smart contract platforms. So here, let's fiddle around with this a little bit so I don't have to shuffle in the chair. There we go. I can slouch. So Swan Bitcoin. Actually, I'll bring up their page. We shall share this tab instead and bring it up. There we go. Swan Bitcoin started out around 2020, and they were mainly for DCA. You know, you could buy Bitcoin, you could sell Bitcoin. They're a Bitcoin-only company, and you could do. They're one of the first companies that enabled people to do DCA, where I think they had a threshold of $20 or $25 every 2 weeks. Every week or so, and they do have low fees, just under 1%, which is significantly better than Coinbase. They had their custody with it used to be Prime Trust, then they moved over to Fortress, and I don't know with Fortress if they're looking to invest and purchase that and take ownership of it, or if they're looking into other entities. I think they were possibly looking into either Fireblocks or BitGo, because we found out not 2 weeks or so after Swan had announced, hey, we moved over to Fortress, it was announced, hey, Ripple, the company, was looking to buy Fortress. And a lot of Bitcoiners said, oh, hell no, we want nothing to do with that. And then we find out a few weeks later, Ripple pulls out, and there was a gap similar to Prime Trust and how they had a gap in their funding. It turns out that same thing applied with, there we go. Let's stick with that. How about that? The same thing applied to Fortress, where there was a gap with funds. So we don't know where that goes. But anyway, we'll bring this up. So in Swan Bitcoin, they've evolved their business model over time where, and I've used them before, and it's real easy. It's fairly easy to use, very straightforward. You could set your levels. What do they got for personal free withdrawals? I'm trying to see if they've got the information. They have numerous, I'll just call it, leave it from here. So they've got it set up where you could set a threshold so that when you accumulate a certain amount of Bitcoin, they'll hold it in custody until it reaches that threshold, and then it'll automatically, you'll get the notification, approve the withdrawal, and boom, it goes straight to whatever wallet address you want it to. If you want to just let them custody it and then make withdrawals whenever you want to, you can do that. Well, over the years, they've expanded their business model where they're now catering to private clients. They're doing the Bitcoin treasury, Bitcoin benefits. They're expanding the different offerings. And then this guy, Corey Clipston, he's an interesting part of the equation as well, because he is definitely a person who is very vocal in the space, in the social media space. And he had absolutely zero bones about jumping all over the third-party risk like the Celsiuses, the Prime Trusts, and saying who was the one, the BlockFis, and saying they're garbage, you're going to get your ass handed to you, get out now. And it was recently in the last, probably last couple months that they were announcing, hey, we're expanding our business line. We're getting some rounds of funding. We haven't disclosed our partners or whatnot or who's involved in this. And then, do I have the notes in my script? I hope I do. Oh, it was in the press release. Let's get it to this. So after reading listening to RHR and Matt Odell, and he's correct when he says that they're basically a mining company now. They're a mining company where their primary source of revenue is from Bitcoin mining. Well, I decided to do some searching, and I found the article for this, the press release, and there was a quote which I think is very, very important. Swan expanded dramatically over the past year, doubling team size and growing revenue to 125 million annualized. The company intends to raise its Series C financing in the coming months with uses of capital equity, blah, 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 mining acquisitions. Clipston said the company is actively working to achieve a public listing in the next 12 months. So, if they wanted to go public, what does this do to the business model? How does this change their stances and how vocal Corey Clipston and other people are about risks in the space? What does this change as far as, I don't want to say the incentives, but once you issue ownership shares to the public, whoever owns those shares has a bit of a voice. I could also see that the Series B and Series C financing are going to kick off really well, especially when they're having those talks and they're asking for the to get some funding. They're going to say, and you know what? You'll be able to cash in pretty darn good when we file for an IPO and go public. So that's a pretty big incentive for a company to want to put money into this. But you have a Bitcoin-only company offering all these services, private clients, IRAs, the retail end for the DCA, and the buying and selling, which was their old bread and butter, the mining, which it seems like I remember Celsius was doing that, Tether's doing that. Who else is doing that? Like I give credit to Strike and Jack Mallers that they are not. They're focusing on their app, and that's it. They're focusing on that. With Swan, once that company goes public, what will change? Like, just my gut feel, there's a caution, because now that you're going to have new actors involved and new players involved, you're going to have the BlackRocks, you're going to have the BNY Mellons and the Chase Manhattan Banks and the Fidelities, and well, I don't know if you'd have the Vanguards, but you'll have all these big money funds whose goals and the incentives that they are responding to completely from another galaxy than what you and I is important for us. How will Swan services change? Are they going to start using leverage? Are they going to be putting themselves out there? We don't know. But also, too, does this mean they're going to be all of a sudden, they're going to be doing a lot of compliance, which means more surveillance, which means more disclosure, information disclosure, which means essentially anything which already, just because they work with banks, you have to set up the regular KYC information in order to have this account. But how much further does this get pushed into the face of surveillance? We don't know. But I would definitely say more so, because you're going to have more regulations, which, to be fair, the evolution of Bitcoin-based businesses, that's going to happen. That's just part of the growth of the space. That's just part of the natural evolution of the financial industry. And this Bitcoin being the asset product, the companies that offer this, they have to comply with this. It doesn't matter if it's Bitcoin, gold coins, or stocks. The companies have to be within compliance, but it also means, from a risk standpoint, from a state threat standpoint, you are even more so putting yourself underneath a microscope and a magnifying glass, and everything you're doing possibly being surveilled and tracked and tied around. So it's just something to keep in mind. And if you're looking, and also too, here's another one. Let's say the mining business, something happens, the finances get screwed, some debt they take goes sour, something where it impacts the finances. Now, in the press release, it had said each business entity of theirs are kept as separate entities. They're owned by Swan, but they're all operating, and they've got legal structuring, so they're all separate from each other. So the impression I get is that if one of these entities takes a hit and goes under, the other ones won't be directly affected, from a financial standpoint. However, if there's anything that anyone who's been in the Bitcoin space for a duration of time knows, the reputational damage could be massive. Where if you found out like BlockFi, you find out that there's a risk of BlockFi, pretty soon, everyone's out. FTX is at risk, everyone's out. Celsius is at risk, everyone's going out. Swan's at risk, everyone's going out. And you're just going to have those cascade effects where people are not willing to suffer third-party risk And I'm going to save my ass and pull my funds. And then that causes the run. And that leads to cascade effects. But then also, too, even if that doesn't shut all the operations down, you still have the reputational risk where it's like, yeah, well, Swan had that thing and it went down. I don't know if I want to deal with them. Like, they might be talking a good talk and their other businesses are doing fine, but I don't want to take that risk. If there's anything people in the Bitcoin space are cognizant of, it's risk. It's third-party risk. And I will run this into, that's why I use, and I'll bring this one up. Goodbye, Swan. We're going to bring up Strike. Video not available. Okay. I'll bring it up. That's why I use that for my DCA. I like using Strike. Jack Mallers is as hardcore of a Bitcoiner as you can get. Strike. There we go. Strike app. It's a great app. Oh, they don't have it. Strike app is basically primarily, and I've talked about this in the past. Let's bring this up. There we go. Strike app is primarily a money app going peer-to-peer, where you can instantly send money around the world at zero cost. And the way it works is you have an account with Strike, normal KYC, you've got a bank account tied on your end. The person on the other end's got a bank account. You can send money to them instantly, instant settlement. That's because they use the Lightning Network to move from your account to theirs, and all the back end stuff with the bank accounts change. But it's all within the app, so it's instantaneous. And also for DCA, they are a great option because just like Swan, they've got a 0.99% fee, and you can set it up. Let's see if we got DCA mentioned here. Bitcoin. Yeah, boy. Withdraw. There's no transaction fees. And they have great options. Let's keep the animation on. They've got great options where you can do a DCA either monthly or weekly or daily or even hourly. So if you want to get, really cash in on all the price movements, that's a great option. And then also too, they've had a service pretty much since their inception where you can, get paid in Bitcoin, where essentially that is more or less the way it works in the background is when you have, say, in the US anyway, you've got your ACH where your paycheck basically is paid electronically and deposited in your bank. It's sort of like they do a reroute where your paycheck goes to Strike's bank, and then within the app, let's say you want to say, I want to get paid 50% in Bitcoin, 50% in cash. So then what happens is your paycheck for $1,000 gets routed to their bank, and in your Strike account, 50% of that gets deposited as Bitcoin and 50% as cash. And then you can move your cash and just have that get moved and essentially withdraw it to your own bank account. So it's sort of a workaround, but it works. I mess around with that for a little bit, and it's like, yeah, I'll just do the dollar cost averaging where every week I'll deposit a few dollars, set up the daily buy, and then every day get the notification, your purchase of X amount of dollars for Bitcoin has gone through. And so Strike I got to say that Strike, Jack Mallers is a pretty hardcore Bitcoiner and a big believer in the freedom tech and how it enables freedom through the financial angle as well. And he's one I still trust. Ooh, and last bit of the gossip. I'll close out with this. Our good friends at Abra. So, Abra. Abra was an app started by Bill Barnhart, and he is a long timer in the space. Well, I saw an article, I think it was in either CoinDesk or it was one of the smaller ones like the Block or something like that. No. Protos is great. Let's bring them up. Protos is one of my new go-tos because they have a good investigative type of angle. And I'm going to see if we can find the article. Are we showing it? Yes, let's magnify that. They got the article on Abra because it gave some insight into just what's going on. And if you can just see from the headlines, like they ask a lot of deep questions and they're willing to dig into it. All right, I'm going to have to do search for this, not to keep everyone's time held up here. I'm searching for Abra, good sir. Okay, insolvent, lied about FTX exposure. FTX, Abra, oh, come on. All right, they're being buttholes, so I'll just go into it myself. So what they were saying was, going into the article, that it was insolvent, and Abra had an app. Within the app, they worked with Prime Trust or BitGo as their custodian. I think it was Prime Trust. And you could buy and sell a few dozen different, mainly like Ethereum coins and tokens within the app. A lot of the stuff you see on Coinbase, you could also get through here, through the app. And they also had lending where you could borrow take out a cash loan and use Bitcoin as collateral. And you'd have to do an extreme loan to value where, depending on how much Bitcoin you put down would depend on how much cash you could get. But essentially, that was their model. And they also had a borrowing program and a lending program, which, from what he had said in a podcast, their interest rates were at where they're at, and they were significantly lower than like the Celsiuses and the Nexos and stuff, and because it was a self-funding program. Well, then we got a message in, I think it was July, that, hey, we're wrapping up our retail operations and we're only working with accredited investors. So if you got a loan, you're going to need to pay it back. If you got any lending, that's going to be shut down. And we're also going to allow any trading. And then end of August, retail operations in the U.S. are shut down. They were still had an operations with payment platform tied into the Philippines, which has been popular for years. And then let's bring it up here. Alleged that they've been insolvent, which is tragic because Bill Barnhart has been one of the more open and I think trying to be honest people. I mean, I'm not. I always had a good experience with it, and yeah, I can't. Again, I think there's a lot of cases of where he just Bankman-Fried and just effed up on a lot of stuff, and they made had risks, and so they were using FTX, Babel Finance, Genesis, Three Arrows. Look at that. Delays withdrawals, spooks Binance users, Swan users mid-acquisition. There you go. Yeah, I can't find it, but this gives you the basic thing. And then we just had that mentioned recently where Oh yeah, by the way, we found this out about Abra. So that was very interesting. So wow, this one went a good deal longer. And I'm glad if you stuck around this far, thank you. I'm glad to share this stuff with you. There's always things to learn in this space. If got any comments or got any other insights or any tidbits, throw them in the comments. I'm always curious to see what other people have to say and like it other people's perspectives. So I'll see if this new format works. Kind of run with it, see if I can refine it, see if I can get a little bit fancier on the controls and the screen transitions. Thank you for bearing with me. And with that, I will say, you can follow me along at TinyCryptoBlog at tinycryptoblog.com, where the main articles get posted. If you are mainly a social media creature, YouTube's the main one. Twitter gets copied. And then whenever I'm able to be allowed to log into Facebook, that's its own bucket of worms. I'll share the articles, the shorts, and the whatnot. But I'm going to say YouTube is probably the main platform for news and things, and the website, which, to make life easy on you, you can also subscribe. If you have a WordPress account, you can subscribe using the WordPress account, or you can subscribe using email, and the articles go out or published. They'll go straight to your inbox. You don't even have to give it a second thought, and makes it easy peasy, simple as pie. So also if you want to listen to audio versions of this, you can see that in the video descriptions. And with that, I think I'm going to say, be well, everyone. Talk to you soon. Have a good week, and see you next Friday. Take care, everyone.